Welcome, everybody. This is Peter and Julia, and today we're going to share with you our top five predictions, our forecast for commercial real estate and multifamily. Good morning, Julia.
Good morning, Peter. Thank you for having me again.
You are so welcome. Last year we did pretty good.
We did. We just missed one, I think. So
Yep, you're right. We missed one, and I think that one we missed is probably a good thing, and we'll
I do.
discuss that a little later. Yep. All right.
Mhm.
Okay. So I want to just get started with saying that I want to preface these predictions, this talk here, with a little bit of uncertainty, and that uncertainty comes from a new administration coming in, and it's called national policy, right? So we're going to have brand new policy on budget proposals, immigration, tariffs, and tax laws and deregulation, right? So all
Ex-
that's going to be brand new, and these are all somehow connected to one another, and they are going to affect commercial real estate. Okay,
Yes,
so we're just not sure. It's a little bit of uncertainty, and Julie, in my opinion, anytime there's uncertainty, for those that are really attuned to the market, that spells opportunity, right?
it sure does. I can't wait to talk about it a little bit more.
Yes, yes, absolutely. All right. So I'm going to get started right here with our prediction number one, and
Mhm.
I'll break it down, and that will be that demographics will tell a story this year. Okay, and let's face it, these are all this is numerical, empirical data that we can't deny. Right, the writing's on the wall. We have 75 million baby boomers in this country. I'm one of them. We have 73 million millennials, and we have about 70 million Generation Zers out there. Okay. And so my group, the baby boomers, guess what we're doing? We're older. Some of us are selling our properties, right?
Yeah.
We're kind of
Mhm.
exiting the business. I'm not, but some people my age, they are. They're retired, they're up in age, and they're ready to go. And we see that in our closings these last 2 years, right? A lot of our students that are buying deals are from the baby boomers. So
Exactly.
our research shows that what is it, 75,000 per day baby boomers who are exiting the business are retiring, and they're
Hmm.
selling their properties, selling their businesses, and so we're going to see a lot of that today. So the baby boomers are going to drive senior housing and mobile and medical office space, in my opinion. And there's a correlation with multifamily too that we get into a little later. And you think about the 73 million millennials, right? Well, let's do this. Let's lump the millennials and a Generation Z together, like 140, 150 million people in our country. They're
Yep.
going to drive multifamily, right? They really are. Yeah, and you talk about this a little later. They're driving it because home prices are still really high and the interest rates are still really high. They can't afford to buy a home,
It's almost
right?
impossible. Right.
Yeah,
Hmm.
yeah, yeah. So they're going to stay renters, and that's going to drive multifamily. And you'll discuss that a little more today.
Exactly. And
Hmm.
that brings me to my point too of the housing supply and demand imbalance that we're still going to see
Yeah,
in 2020, right? So I think high interest rates are still going to linger. New construction, I want to talk about real quick because there's a lot of talk about it around the Trump administration coming in and how it's going to boost new construction. But what I think is going to happen first is that we're going to see it suffer a little bit because of high costs of building, high costs of borrowing money to build. We
tariffs.
just Yeah, exactly, and we can't build fast enough to meet the demand, right? So, I think we're still gonna see a little bit of struggle there, but for multifamily in 2025, to your point, I think multifamily is going to increase in demand. Multifamily vacancies will decrease. Again, these millennials and Gen Z, they're not gonna be able to afford homes, they need to rent. Multifamily rents will increase along with the NOI, of course, increased rent, keeping expenses low, higher NOI, higher value, right? We know this. The end result is going to be that multifamily value just overall increases. That's what I think is going to happen.
I think what you're saying, and you've managed over 3,000 multifamily units, right, at one point. So you know about this market quite a bit. So you're
Yeah,
saying in 2025, multifamily is going to be probably your top choice. Is that right?
I believe so.
Yeah,
Absolutely. Yeah.
yeah,
And I think we
yeah,
saw that starting in 2024, and I think we talked about that last year too, but I just think we're going to continue to see that trend increase as well.
yeah, yeah. Okay.
Mhm.
Now on to interest rates. Here's my opinion. I think we should expect to see a six in the interest rate throughout 2025, right? Today, it may be 6.8, 6.9. By the end of the year, it may be 6.2, 6.3. That's my prediction. I want to read you something from Fannie Mae. Okay, here's Fannie Mae forecast, and they've been pretty accurate. It says it dictates that 2025 rates will be in line with the rates over the last decade. Now, get this, since 1990, the 30-year fixed rate mortgage has averaged 6%. Did you know that?
I
The
didn't.
historic average is 6.72%, and many economists call 6% a balanced and healthy interest rate.
Interesting. So we're
It is
actually looking at a
interesting.
good interest
Yeah.
rate.
hmm
Okay.
I think for the general public, they're looking at the federal funds rate, right? When we hear the Feds reducing their rate, we think that it's going to correlate to dropping the interest rate, and it hasn't. And the reason
No.
why is we need to keep our eye on the 10-year Treasury. Okay, right
Mhm.
now it's above 4%. As that drops, right, that's when interest rates drops, and that's where more people come in the market, and then that's where deals get better because the interest rates drop. So we need to
Right.
keep our eye on the 10-year Treasury, and right now it's still pretty high. Okay, it
Mhm.
hasn't dropped along with the Fed funds rate. Okay, so this year keep your eye on the federal funds rate and not on the I mean keep your eye on the 10-year Treasury and not on the federal funds rate as it drops. Okay.
Right.
All right. So keep an eye on that. We shouldn't expect the Fed to drop them significantly, right? I've
Mhm.
heard some talks because of what you just mentioned, the tariffs, the budget proposals, things like that. It may cause inflation to rise a bit, right? And
Mhm.
so don't expect interest rates to make any major moves in 2025, is my opinion. All right.
Mhm.
All right. Now, to me, with interest rates being static like that, to me, it means three things for deal making. All right.
Mhm.
Number one is I think we should all recognize that when we do a deal in 2025, don't do a deal anticipating rates dropping, right? Some people
Right.
they'll get into a deal and says Peter and say they'll say Peter, I'll do this deal, and then 3 years later I'm going to refinance at a lower rate. Don't do that anymore.
Mm.
That's not going to
No.
happen. That's dangerous. All right.
We gotta look at the cash flow these days. Gotta
That's right.
focus on it.
And that's point number two, right? Cash flow over appreciation, right? And you and I, we meet with students every single month on their properties, and we reinforce that cash flow is king, right? So the
Yeah.
appreciation comes later. So when you think about it, if you were to focus on cash flow, you're obviously focusing on maximizing the income, right?
Mhm.
Reducing or controlling expenses, and those two
Right.
things give you the best NOI, right?
Which is your
So
value. Mhm.
yeah, there you go. So if you focus on cash flow, guess what comes later? The appreciation.
Exactly.
So 2025 is the year of the NOI, and we need to really focus on that. All right. The third thing is I think because where interest rates are high, we should focus on distressed properties,
Mhm.
underperforming properties, and properties that are just maybe undervalued or undervalued for some reason. Okay, and
Right.
the reason could be the interest rates were so high, insurance has gone up so much, property taxes have gone up so much,
Mhm.
inflation has caused these apartments to run at such a high level of expense, these owners are distressed, right?
Exactly.
So that's a level, I mean, that's opportunity for us, for you out there to go out and find, properties that are distressed, maybe underperforming and maybe undervalued. So I think
Mhm.
interest rates being stuck at 6% is a good thing for those that are looking, right?
Mhm.
Because I think a lot of people, Julia, are still going to be in the sidelines waiting for the interest rates to drop. That means
Right.
more properties for us, right? More opportunities for us.
Exactly. And I think historically too, we've focused on finding those type of properties, right? Those type of asset classes of distressed value add, right? That's what we teach our students.
Mhm.
So I think continue to market to those. We'll probably put a bigger push on marketing to those in this upcoming year as well. Change up our marketing, strategies as well to more focus on exactly that, exactly those asset types that you're discussing.
Yep, yep. And speaking of those asset types, this correlates to the one thing we missed last year. And I mentioned 2025 is the year of focusing on distressed properties. A lot of this distress is from property owners who got a multifamily loan, 5
Mhm.
years ago, and now it's time to refinance, right? And they can't because their interest rates 5 years ago was 3%. This year it's 6 to 7%, and they can't
Right.
refinance, right? And last year we thought that this was going to really blow out and cause a lot of distress in the market. It didn't happen, right? It didn't happen. Some of it came out, but it didn't come out like we thought, which I think was a
Mhm.
good thing anyway, right?
Right.
And
Mhm.
so the last stat I looked for 2025 is there are 250 billion dollars in multifamily loans that's going to mature in 2025. Over
Wow.
6,800 properties. Can you believe that?
That's a lot. That's
That's
a
a
lot of
lot.
opportunity.
Yeah, so some of that's going to come to us, right? Not all of it is going to be able to refinance. Okay,
Right.
and
Mhm.
so the ones that were saved last year, I think last year I saw a lot of what we call extend and pretend. So the ones that are distressed, they go to the lender and they ask the lender to extend their loan, and the lenders don't want the property back, so they will work it out with the borrower and extend the loan and pretend everything is okay,
Right.
right? And so
Buy a little
those
more
guys that
time.
are, yeah, those guys that are pretending better get their act together in terms of the NOI, right? Because
Mhm.
they need to, pay off the lender soon. All right. Okay.
Exactly.
All right. And that leads us to your next topic that you talked about, and that is consumer confidence.
So, consumer confidence, I think, is huge to talk about today because ever since the new administration was voted in, and they'll be coming in shortly here in January, there's been a buzz in the air. The economy has got a little bit of a boost. People are a little bit less tight with their money. I'm seeing people going out to restaurants more. In the past, I hadn't seen that. So, I feel people are a little bit more confident in what's upcoming. So, with the consumer confidence, it's currently at 111.7. That is based on the Conference Board's Consumer Confidence Index. So that number, the 111.7, is actually pretty high, showing optimism in the economy. This is actually the highest it's been in the last 3 years.
Yep.
And like I said, it's different now, right? So I feel like people are a little bit more comfortable spending money at this point. Um, with that being said, now talking about the new administration coming in, I want to just touch on the Trump deregulation and tax cuts that will be upcoming.
Yeah.
So here's some good news. Whether you voted for him or not, Trump is a real estate guy, right? So he made his millions and billions in real estate development, real estate investing. So for us as real estate investors, that is great sign that that's who we have in the Oval Office, right? I would argue that he knows more about real estate than any other elected politician that we've had. So
Sure.
that is good news. I think we're going to be seeing really good movement in real estate. Is it all going to happen in 1 year? No, it's going to probably take a couple years to make some changes there, right? So you recall him saying, drill, baby, drill.
Yep.
So I think that eventually we're going to see the interest rates come down because we're going to see, oil drilling coming back to our country, right? And then we're going to see a reduction in the cost of energy, and eventually that's going to continue to trickle down, trickle down, trickle down. Hopefully, lower our interest rates at the end of the day. So that's what I forecast. 2026, maybe we'll do another
Yep.
forecast at the end of the year.
Mm-hmm. Mm-hmm.
Um, so we'll see that coming. Having the majority of the House, Republican House, Senate, Supreme Court, it's only going to help Trump push his agenda forward as far as these deregulation and tax cuts. The other big one is the bonus depreciation. That one I'm really excited about. So the bonus depreciation back in 2017, he had implemented this. Um, it was to get 100% back on your depreciation, right? Which is huge help for a lot of us investors. That was supposed to be phased out in 2027. Now that he's back in office, he has spoken about re-upping that, essentially making that um, a permanent part of his regulations. So
That would be
I think
huge.
it's
That would
going to
be
be a big
huge. Yep.
right. So that I think is going to help a lot of investors moving forward. Um, And it's going to encourage people even more now to continue to invest. Or, if you're really watching the real estate market, it should push you to want to invest to take advantage of this. Um, so, with that being said, I want to talk more about how we're going to be finding deals, right? So, I touched on the marketing a little bit earlier on, what we're going to be doing to finding deals. So, in your opinion, Peter, what do you think that we're going to be doing for deal finding when it comes to 2025?
I have two thoughts on that. And number one, as I mentioned before, I think there's a lot of uncertainty in the market, and that's
Hmm.
going to keep uh, people on the sidelines with their capital, waiting to see what's going to happen, right?
Hmm.
And as you and I know, that's a big mistake, right? There's always opportunities out there, always, right? There may not as much opportunity as in the good old days, but there's always out there. So I think so far as deal finding, for those that are actively looking, you will find something. You just can't give up, right? So deal finding will be you need some specialized knowledge that we apply that we educate our students on how to find these off-market deals. So I
Hmm.
think 2025 is the year of the off-market deal. I really do.
Yep, and
Okay,
targeting baby boomers like you spoke about earlier.
that's right.
There's quite a few students that come to mind too that have bought property over the last couple years from baby boomers, like you mentioned earlier.
A lot of these baby boomers, like as we said, 75,000 per day are exiting, their business, whether it be a business or real estate or single family, they're exiting. And
Right.
a lot of that has come down, like you said, to our students, Daryl, right? Eric and Maria and others, right? So
Mhm.
so you and I, we do these closings every single month, and we know who the sellers are. We know
Right.
exactly who they are, their ages, their demographics, their background. And I would have to say maybe the last quarter, Julia, of 2024, it was 100% baby boomers, right?
Mhm. It was.
Yeah,
It
that's
was.
very telling. Very telling. Yeah, yeah. So I think that will be a source of deal finding too, is anticipating the baby boomers to offload more of their properties as they age, and also off-market deals and
Mhm.
pocket listings are going to be the best way to find the best deals, in my opinion.
I couldn't agree more.
Mhm.
So let's do a summary of everything that we just talked about.
Sure, let's
So
do that.
there's some really great points that we had here. So first, what our prediction is US demographics are going to tell the story, right? Like you just talked about. So multifamily is going to be at the top of the line. It's going to rule. Uh, Industrial and warehouse will be shortly behind that. Self-storage, mobile home parks, flex space, I think they're going to fall behind those two. I think multifamily and industrial warehouse are really going to be the top. Uh,
Mhm.
Number two, the buy cycle is upon us. So now it's time to buy, right?
Time to
Interest
be
rates are
active. Yeah.
exactly. The interest rates are going to be stabilized. Like you mentioned, six is actually a good interest rate. Market fundamentals have strengthened as well.
Yeah, and
Number,
let's talk about market fundamentals for a second
three.
because
Yeah.
the market fundamentals are very strong these days. You mentioned that rents are going up,
Mhm.
vacancies are dropping in multifamily, right? So why wouldn't you want to jump into commercial real estate? And my opinion is because of the news that you're paying attention to the wrong news, right? And
Mhm.
you're waiting for the market to drop before you get in, and you can be waiting forever. So if you wait 10 years from now, you have missed a huge opportunity, huge opportunity. So the market fundamentals today are ripe for you to get in and be rewarded 5 years down the road.
Exactly. Talking about the news, it just made me think of that saying with the news is always if it bleeds, it leads, right? That's just the
Yeah.
saying. It's
Yeah.
always just scare. It's just a scare tactic. If you listen to it, you're not going to be a real estate investor. You're going to be stuck where you are, right?
Yep.
You gotta listen to knowledgeable people like you, Peter. Listen to people that are in the market daily. Do some research yourself. It's so important, and real estate investing is going to be huge in 2025. So take the leap.
Yeah. And when you think about it, Julia, if you were to watch the news and Yahoo News put an article, it's time to get into multifamily. It's time to get into commercial real estate. It is absolutely too late for you, right?
Mhm.
Too late for you.
It's
You should have been in a while back, right? So
Right.
by the time they get to news, everyone's already in, including all of us, right?
Mhm.
So it may be
Exactly.
too late. Mhm. So get it
Couldn't agree
now. Be active.
Exactly, exactly. So, yeah, so that's, the bicycle is upon us, like I said, for number 2, so it's huge. Number 3 is the new administration that I talked about. Obviously, they're going to favor commercial real estate investors and just real estate investing in general. Number 4 is going to be the consumer confidence. Like I said, it's at its highest that it's been in several years. That should give everybody confidence as well. It's, written in the stats, right? So that's definitely going to trickle down to commercial real estate property owners as well,
Yeah.
who are holding off for buying and selling. I predict that more deals are going to be had, obviously, in 2025. And then the fifth and last point is being on the sidelines is foolishness, right?
Yeah.
You've said this. So you want to get in the game. Best time to have bought real estate is 5 years ago. The second best time is today. So,
Yeah, absolutely, absolutely. I saw a someone respond to that blog post I put out about that exact same saying, right? That
mhm,
Peter, why was the best time 5 years ago? Why is the second best time today? And someone asked, why is that, right? And it's because 5 years ago interest rates are 3%, right?
I was just going to
And
say,
and so it was a great time to get in, right? And they're wondering why is today the second best time, right? It's because today is where the market is, and and do not expect the market to implode or crash. We've been waiting for that since like 2006, and it hasn't happened. The market will it'll make some ups and downs, but over the course of time, it's going to start here, and 10 years later, it'll be here, right?
hmm
So,
hmm
but how it's going to get up to here is through jagged lines, right? So don't wait for this to happen. It's not going to happen, right? So the next best time to buy is today because you're anticipating getting way up to the top, and it takes time. Okay, so
it's
real
the
estate, commercial real estate is a long game. Don't expect to get rich overnight. It takes years, but it's
it
well
does.
worth it. It changed lives. Look at our students' lives that we've changed. They've been able to retire, put kids through college, leave their jobs, all of that because they were patient and good operators, pay attention to the NOI, and then seeing the results, right?
Mhm. Exactly. Yep. Yep. I've seen some crazy success stories on our end as coaches. So it's so fulfilling to see, and it's amazing to see what people have done with properties that they bought with us 5 years ago. We have a lot of
Yeah,
students that do sell, because their value increase has happened, their NOI is higher, value add. It's just huge. The numbers that we've seen are just they're incredible, and I can't wait to keep seeing them happen in 2025.
absolutely. Absolutely. Okay, so Julia, there we have it. We have our top five predictions. You can take all five to the bank. Let's see how we do next year in 2026, but I think we're going to do pretty good again.
I think so too.
All right. Okay.
Thanks.
Well, thanks, Julia, for being patient with me and helping me put all this together. And everyone out there, thank you so much for joining us. And if you want to learn more about what we do, go ahead and click on the link there. There's a link to get mentored by us, by myself and Julia directly. There is a book link on the screen if you want to just read a book and learn how commercial estate works. Go right ahead. And if you just want to get videos just like this to your YouTube feed, just click subscribe and we'll send them to you on a weekly basis. Thank you, everyone. Julia and I wish you the best of 2025, and we'll see you at the next video.